Hi, welcome to the Market Alert for Wednesday, the 27th of July 2022. So yesterday, stocks, crypto and yield curve tumble. A strong consumer narrative was crushed. The yield curve is the most inverted since August 2000, so recession guaranteed there then. Stocks sold off whilst the dollar surged past 107. No surprise because of the rate increase that's going to happen today. US equities sold off throughout the session in risk trade, tracking the poor tone out of Europe. It took a long time for it to sell off, actually. It was quite bullish yesterday. Waiting for the Fed. Yeah, we're still stuck in limbo. Last 2 days have been like that. So today at 7 p.m, let's have a look. We're looking for a 75 basis increase in rates from the Fed. Anything more than this will send the market lower. Anything less than this will send the market to the upside. If it comes out, then expect the market to drift a bit lower over the next few days. Press conference at 7:30 as well. There's no point looking at the rest of the news because that's what the market's going to be waiting for. And the gold-silver ratio down yesterday, but starting to make its way back up. But today, silver had a day to the upside yesterday, but overnight, different matter. So in the Dow, we can see the markets traded down to the 50 EMA, the 62% and 78% retracement there. Not quite making the 89 prices up on the overnight, back at the 5-bar moving average. And also above 62% retracement from here, projected to the upside along with the other fib retracements there. You could actually place in some short-term ones as well from here down to here and projected back. So let's just do this. So a quick look, and there you'll see the market's already through the 38 and heading for the 50% retracement. You'll see also that 62 ties in with 62 there as well. If I can just remove the other fibs. And let me just do this, and you'll see I've just removed the wrong one. So with 62 ties in which with this 62 there, so there's a confluence at this level, so keep an eye on that one. In the 30-minute charts for yesterday, I'll find it in a second. Here we go. The market sideways during the first part, so you can see it moving down, then it retraced 78% there, and then we went back through the 200 MA and all the way down, and then before the close the market was brought back. Whether that's the plunge protection team, I don't know, but overnight prices have seen demand and at the DP and the close and the switch to green. We're also through the 89%, which is from here projected back to here at the moment. We've also got yesterday's high in the radar there as well. Just go back to the daily chart. Yes, that's right. Yeah, just want to look at the high in there as well. So that ties in quite nicely. We'll just have to wait and see what the market's going to do today. It's been fairly choppy and quiet for the last couple of days as the market waits for the Fed. In the German DAX, also demand for yesterday at 62% retracement, looking a bit weakish at the moment, struggling to get through the 5-bar moving average, which it will need to take out in the daily. Also, just like the Dow, from here down to here, you've got a set of fibs there, smaller time fibs as well, but then you can use these to project up as well. And again, you'll find a confluence of fibs, but notice 78% retracement ties in with the 50-bar moving average there in the daily chart. In the 30-minute chart, you can see that yesterday was a choppy day, market down, then up, then sold off, and then it was up and down. Like I say, it was all over the place yesterday, which wasn't too bad. If we look at the 5-minute chart, I just dragged this over. You can see the rally back there last night as the Dow closed, or just after. And yesterday, you can see it was choppy sideways to the downside there. Then a bit of a reprieve. Then we've got a retracement, and then to the downside. But like I say, not a lot happening. Another news item there, and then the market stuck in that range. Results this week, I forgot yesterday. Yesterday's trading was 2.31 on the 61.95 on the profit factor. I didn't do that many trades, so that's going to be distorted. You know, if you could have that all the time, it'd be fantastic. And obviously 90% to 10% win to loss ratio, but you want more trades in these numbers to see the real figures, and you've got 2.47 there. 70.30 for the week thus far. Only 208.04. That's because the market's been choppy, and I've just looked at it and thought, well, there's no point in wasting the gunpowder. Might as well keep it dry. And let's move on to the S&P. In the S&P, looking quite strong here. You can see the market trading down, but even failing to get down to the 38% retracement drawn in from here. Back to here, so we're above the 50 EMA as well. So once again, you want to go from here to here just to see where the numbers are on the upside. We're through the 38, but the 50, 62, 78 and 89 are all available there for the market to attack. In the 30 minutes, you can see the sell-off yesterday, retest of the low before the market was brought back after hours. Again, like the Dow, close to yesterday's high, but the 200 MA is in the way in the 30-minute chart. But saying that, the averages are not quite in the right order. You need the 20 above the 50, but otherwise 2 out of the 4 there in the right direction. Like I say, the stock market's going to have to wait and see what they do. They'll probably tread water, I would have thought. In the FTSE, again, still very strong. Stuck at the 200 MA as it was back here, which was the 29th of June. So a bit of resistance there with the 200 MA. Very important moving average. 25 and 50 below, which is good. So still on the positive side there for the FTSE. Yesterday we moved higher initially, then we had retracement, moved down with the German DAX, but again overnight you can see how the market rallied quickly and is currently above the DP in the 30-minute chart there. And in the currencies, JPY above the 62% retracement, so you've got your other 78, 89 there as well. Again, the averages are quite apart there, moving quite nicely, the 5 above the 20 and the 50. I'd say it's just a matter of what happens today, but you can see how the market found support at that 50 EMA and also tying in with the 62% retracement there. Yesterday we had a bit of a sell-off to start with, the market finding support at the BRN with some demand, crossover, oversold with the momentum switching, and then it was brought back overnight, which you can see there. In the pound, also sideways yesterday, but above the 5-bar moving average overnight. Upside target, 62% retracement there as well. Depends on how the dollar reacts later this evening. And in the 30-minute chart, the pound moving sharply lower there, and then moving back to the upside as well, sideways into the early evening, and then the Asian market prices above the close, the DP, and the average is there as well at this time. And finally, in the metals, silver still treading water sideways for yesterday and overnight. You can see there that during yesterday we had the market move lower. The 1 o'clock fix yesterday ended here with them actually buying, which is most unusual. And then the market traded sideways, put in an 89% retracement from here to here, and has moved lower and has just come back above the DP. And you can see in the 30-minute chart we're very much oversold. So looking for a bit of a rally there. Will we get above yesterday's high? We'll have to wait and see. But again, it's all down to this evening. Gold sideways as well, and in the 30-minute chart also seeing prices move higher there. Maybe they're moving them up to slam them down later, who knows. The dollar up yesterday and sideways to lower overnight at the moment, again waiting for the Fed's decision later. Crude oil also treading water, but still way above the $100 per barrel level, 106 at the moment. Okay, that's it for this one. It'll be an interesting evening, so roll on 7 p.m, see what the Fed does, and see if they've got the balls to raise rates by 100 basis points. Only time will tell. And that'll do it for this one. So as ever, thanks for watching. See you in the next.